Welcome everybody to the amazing Dynasty Builder with Leah Garcia. If you don't know, we are in the amazing Hello Plaza metaverse where you can join us from your cell phone, your laptop, your iPad, and we are on YouTube, we are on LinkedIn, and we are on Facebook. And we want to make sure you guys are all collaborating with us. Hit that share button, hit the love button. Come and join us in the metaverse, but more importantly, get ready for this amazing conversation with Leah Garcia, the hidden tax game, the advanced tax strategies for wealth builders. And if you don't know, Leah Garcia is the Dynasty Builder, serving high achieving entrepreneurs, enterprises, and zero net cost benefits, advanced tax mitigation, and she has an amazing wall of wealth strategic ebook, an interactive ebook that you all can go into her amazing Biz in a Box. It's more than a website. It is an actual experience into dynasty building your legacy. And more importantly, she's here clarifying and the conflicting advice and giving financial strategies from Leah Garcia. Miss Leah, talk to us, ma'am. Tell us, why is today's Dynasty Builder conversation the hidden tax game? Talk to us, man.
Absolutely. Thank you so much, Mr. Mycroft. I am fired up to be here. Yes, I'm the Dynasty Builder. And it is so important that we learn how to play money chess. Most people are playing checkers. They make some money and they pay some money. They don't have a strategy. And here's the thing. We've all heard this said a million times. It's not how much money we make, but it's how much money we keep. And I would add to that, it's how much money we can keep and spend. Okay, if we make this money, we have this money, anyone can help you to accumulate wealth. Listen, there are 2-year-olds making millions of dollars. It is not rocket science on how to attract and generate wealth, but how do you keep it and build that family dynasty? You are the one in your family that's supposed to change your family's last name forever. I'm fired up from this conversation. Thank you so much. If you can tell, I'm excited.
I absolutely love it, Miss Leah. It's great to have you here. Thank you so much. And, you know, not many people get excited for tax conversations. I have to say that. I know I don't. So, but that's the beauty of it. And it's not just because taxes blow your hair back. It is because at the end of the day, knowledge is power. And when you shift that knowledge into power by the utilization of that knowledge, and like we like to say, implementing is key. And so let's dive right into this. Absolutely, shall we? First question for you, ma'am, is how, coming up down here is, what is the hidden tax game and why is it so important to understand?
Well, the hidden tax game is because most people just talk to their tax professional, their CPA, enrolled agent, what have you. And really most of them, and this is with all due respect, okay, I'm going to say this with all due respect, most of them are there to keep you in compliance, which, by the way, we need to stay in compliance. They make sure to cross the T's and dot the I's, but they are historians when it comes to taxes. They are going to ask you, how much did you make? And tell you, this is what you owe. When we're playing money chess, then we're looking at advanced strategies. And by the way, we're looking at that in advance. So planning for 2026 happened last year. If you wait until the end of the year and you just give all your receipts and then someone tells you how much you owe, you are playing money checkers and you are leaving a lot of money. You're overpaying Uncle Sam. That's why it's so critical that we learn how to play the real game.
So true, and I think that's one of the biggest things is that we have to get people to understand is that a lot of us think that we're playing the game and we're not. We don't even much know the rules of the game. And you said something that's so key is that, yes, you can also spend money as well. It's the biggest thing that people have to understand is there's structure, there's production, there's protect, and then there's reduce. And a lot of times people don't get those concepts of being able to utilize those things and really understanding the system and playing it correctly. And that's why you share with people, book that coffee chat, which so many times people won't go to Leah Garcia and book that coffee chat and just get basic information because, look, we allow ourselves to get in our way. I was just talking to a client the other day and I'm like, look, you have all these things in place, I said, why are we not moving forward? And flat out, I said, hey, you are self-sabotaging yourself. And I think you're getting to the point where you don't want to be successful. And a lot of the times we don't want to be successful. And so we keep ourselves in that lower level, medium range, other than doing the things that gets us to the next level. And so, one of the things that I know, this is a great question, what is a office, a family office? How does it apply to the everyday individual and businesses? Talk to us about that.
Great question. In the past, historically, a family office concept has been reserved for the rich and wealthy. But these days, with social media, and now we can meet people on Zoom, it really has made a family office concept available to everyone, and you should leverage it. And what this is having your professionals all on the same sheet of music, singing the same song, giving you the same advice. So here's what happens is a lot of people get an advice from the CPA that conflicts from their financial person. So a family office basically is going to have 4 elements. Your CPA or tax professional, someone that can take you through an audit and specializes in your area of expertise. Your estate planning attorney. You need a tax attorney, because when is a worse time to look for a tax attorney is when you need one. And then your financial strategist. I am the quarterback, calling the plays, coordinating everything. And a quarterback is not a refund. Okay, that's not what I'm talking about. Some of you get that later. What I'm talking about is looking at everything holistically and proactively so that we can see things coming down the pipe. We know what's happening in advance, and we're not playing the checkers. We're starting to upgrade our game and playing money chess. And many people might think this is costly. I don't make enough money for that. Listen, just through osmosis, by connecting with me, you're going to get access to that. Let me say that again. Just because you're connected with me, my clients who are my clients get access to my network and my team of highly vetted experts. That's huge.
I don't think a lot of people understand the dynamics of the family office. I think they sometimes stop and think, oh, it's just it's an office that is going to be able to focus on family services, and not understanding the dynamics of how deep family offices can really go, and how much they can really assist you within being able to service multiple avenues of your quest. And the reason why I say that is because it's not just taxes, it's not just investments, it's not just in your returns. It's not just, as I tell David, it's not a just. There's so many layers to it that a family office is really ideal for you. And I will say that because I didn't have a clue what a family office was up until within the last 5 years. And, I'm in my mid 40s. So that should share with you. I share that because there's probably a lot of people out there that are not completely, aware of the dynamics of what the family office is and how it will be able to assist them. So what is the Augusta rule? Let's dive into that.
Yeah, that's a great question. A lot of people have heard of this rule, I think, and sometimes it gets so undervalued because they think, okay, well, that means that I can use my home for up to 14 days, and those are tax-free days. Absolutely, you can. But it really goes beyond that. We're talking about chess here. We're not playing checkers. If you're just using your home for 14 days and you're just looking at the average cost in your tax returns, you're really missing the boat. And let me give this disclaimer here. I am not a tax professional. I'm not a CPA. I'm not an enrolled agent. So this is not tax or legal advice, okay? But what I do is I partner with the experts. And so through osmosis, I learn a lot about these things. But what it really is, when we're playing chess, we're going to look at not just the cost of what it would be to rent my house. You can look at the cost of what it would be to rent a 5-star resort, because you're going to bring in you're going to bring in specialists. You're going to bring in special speakers. You're going to bring in food. You're going to have, little events that you're doing with your team, maybe team building things. So leveraging the Augusta rule, I think, is one of the biggest things that people who are homeowners and who are business owners, and maybe, it's a team of you. Maybe it's a team of you, yourself, and you. Maybe you're looking for new clients and you host this for potential clients. Maybe you host it for your potential team, right? So there's a lot of strategies that you can use, and there's a lot of embellishments that are legal. Okay, this is all above board. We're not talking about gray area. I never talk to things that are kind of wonky here. No, these are all vetted, tried and true, white paper strategies that the rich and wealthy know because they're playing the chess, and they have the experts that are collaborating to teach them how to properly implement that, because it has to all be documented. You got to take photos. You got to have a register who is registering, all of those things to stay in compliant. Does that help, Miss Christmas?
It
Yeah,
sure does.
absolutely.
Absolutely.
Yeah, and one of the other things that I'll add on is your mileage, your home office use, business related expenses. Those are things that you definitely should be utilizing, especially as high as gas has gotten right now. You better be writing that off, right? And really being able to pull money out of your business without increasing, your tax bill. So these are definitely things that most people don't think about, especially as a new entrepreneur, or entrepreneurs that don't have the right tax advice, and just cutting checks and not knowing where it's going, or not knowing what else you could expense. And so that's huge. And so let's talk about the next thing. Why do you talk about so much about this solo 401k plan? Talk to us a little bit more about that.
Yeah, I talk about the solo 401k so much because it's something that I have never seen anyone, unless they're working with me, have even heard of it, even know about it, even think it's something that's available. People always go to an IRA. They think of a traditional IRA, and those are really popular and they can work. But here's the thing, they're very limited to what you can invest in. If you have a solo 401k, not only do you have higher contribution limits because it's just you, okay, this is not for someone who has employees. If you're a solopreneur, you have a side hustle, maybe you're a business owner, but you also do something else on the side where you don't have employees, you probably qualify to open up that solo 401k. You can contribute as the employee and also as the employer, and allow yourself to invest in so many other opportunities that are really not available with a traditional IRA. So you can do things like investing in real estate. You can do Bitcoin. You can do precious metals. You can also take a loan against your from your solo 401k and pay yourself back very, very low interest. I love to leverage this to pay off debt. If you've got high debt right now, credit cards paying 16, 18, 34% interest, why wouldn't you leverage the tax code in your favor, borrow from your solo 401k, pay yourself minimal interest, and get out of debt, increase your credit score? Because one of the things holding people back from building their business is that credit score. How would you like to optimize your credit score in a fraction of the time and being able to leverage? I mean, I call that using the money 3 times, right? It's using it as a tax deduction, as an employee, as a tax write-up, as an employer, being able to leverage it in your favor and have the opportunity to increase your credit score, which will give you access to, maybe you need to get some loans to fund your business, to get your dream started, to get that office, or maybe hire employees or something. So that to me is something I think is one of the biggest blind spots. That's why I have a free ebook about the solo 401k. It's a solo 401k playbook. Download it. It is free, which is one of my favorite F words, right? Everybody wants free, but it's only valuable if it's valuable to you. I'm not giving you trash that I've there on the bottom of the barrel. I'm giving you my best stuff, and it is for free.
Yeah, indeed. And we can only talk about, the solo 401k as good as you do. But we got an AI video that you guys might not have seen that might be able to explain it a little bit better but not as good as Miss Leah. But here we go. Check it out.
High-achieving entrepreneurs and business owners, this is for you. There's a powerful wealth strategy most business owners were never told about. Because traditional retirement plans were designed for entrepreneurs, that's where the Solo 401k comes in. The Solo 401k was built specifically for self-employed business owners, and here's why it matters. As both the employee and the employer, you can often contribute significantly more than a traditional IRA. That means accelerating your wealth, not waiting decades to access it. You may also have the ability to borrow from your Solo 401k, accessing your own capital without banks, without begging, without delays. And unlike most retirement accounts, you're not limited to Wall Street. A Solo 401k can allow investments in real estate, precious metals, and even Bitcoin. This isn't about chasing a rate of return. It's about control, flexibility, and intentional strategy. If you're an entrepreneur who wants their money working as hard as they do, download my free Solo 401k guide and subscribe to my LinkedIn newsletter. Learn more by visiting leahgarcia.io, because this is how you build wealth on purpose. Wealth today, dynasty tomorrow.
One.
And thank you so very much, AI. That is why you guys need AI in your business, because at the end of the day, you just learned a lot more about solo 401ks, and Miss Leah didn't have to say a thing, did she? So let's dive right back into this, Miss Leah. A lot of people set up LLCs, but does that actually help with taxes?
That is a great question. And when I meet a lot of entrepreneurs just starting out, that's the first thing that they do is they set up an LLC. And that is good. But what that does is has nothing to do with taxes. An LLC limits your liability. So it's a first layer of protection on separating you from your business. So if you own a home, if you have other assets, you've got retirement plans, you've got Bitcoin, you've got precious metals, you have precious jewelry and things of that nature, you're starting to create that corporate veil, okay? You're setting up that LLC. However, it's really not anything to do with taxes. It's really about entity layering when you are trying to mitigate, eliminate, and reduce taxes. And why I say mitigate is because people think that they are going to get rid of taxes. No, what we're doing is we're offsetting them. So really, to have a tax strategy, it's going to be layering entities. Typically, it would be an S Corp with an LLC. An LLC, you still have to decide how you're going to file those taxes. Are you going to file your taxes as a sole proprietor? Well, if you don't have a corporation, guess what? You're going to file those taxes as a sole proprietor. Are you going to file it as a corporation? Unless you set it up, then you're still going to be paying that self-employment taxes. So in order to have entity layering, you really need to have tax efficiency and asset protection, income distribution strategy, which is going to be having multiple layers of protection. Is that more clear, Ms. Tara?
Yeah. Go ahead, love. Yes. It absolutely is. And, one of the things that we definitely want to be able to make sure that people understand is that, a LLC does not reduce your taxes. It's just a legal structure, as you were sharing. There's also other types of ways that your money flows, the strategies that you use. Think of, your LLC as the container, and the strategy is what, creates the savings inside that actual container. So definitely, this is even more the reason why having these conversations with Leah is so important, because that question right there could save you so much trouble, because you'd be amazed of how many people think that they can just get an LLC and, oh my God, I'm safe from taxes. And it's like, no, that's just the beginning of the totem pole, right? And so, the next question is, can we legally leverage our kids in our business for tax advantages?
Yes, we should be leveraging our children. So if you have many children or you have one child, you can absolutely leverage your children in your business. Do you know that you can pay your child up to $15,750. Up to $15,750. That is incredible. And if your child is under the age of 18, there's no FICA taxes for them. You should absolutely be leveraging your children. I mean, when I really realized this, listen, I have 4 kids, and I was like, what? I never did this with my kids when they were little. I never did this with them when they were little ones, right? Still living with me. So it's really probably one of the biggest blind spots that I see. It's right there. It's sitting right in front of you. You're feeding your children every day. You're taking them to school. You're helping them with their homework. And those little golden nuggets of tax deductions are right there with you. So how many kids do you have? Do you have 1? Do you have 7? How many children do you have? And there are so many things that they could be doing for you. It doesn't mean that you're just going to go ahead and write a check for your child. It means that they have to be participating. Maybe they're helping you shred paperwork. Maybe they're doing things like that. So you really have to know what they're going to be doing for you. But I'm pretty sure every child could have some tasks that could be beneficial for you in your business.
Baby, we about to have some kids. We about to have like 10 of them.
I'll put those people
Not.
to work. You know, Miss Leah, it's funny that you say that, and we just don't know those things, right? You know, I didn't discover this until I think I heard somebody else, since we've been in business. You, of course, don't put on this hat to think about these things until you go into business for yourself. I had no clue when I was an employee that you could legally leverage your children as a tax advantage. And like you said, make sure they're doing something, and I want to point out this. It not only teaches them, like, yes, we all grew up, especially if you're, baby boomers, Generation X, older millennials, we all grew up with chores, and some of us got paid for chores. I never did. It was a way of living underneath the household. That was my rent. Room and board is what I was paid for. But, the funniest thing about that is it can really transform your children's financial literacy conversation, the relationship that they have when they start working for that and they're receiving a paycheck, and then you're teaching them, to have investments or whatever it is that they're doing with that money. That is a financial literacy petri dish that you're creating. And I don't think we understand how powerful that is within our communities and our childhoods, because I know if I was taught half the things that I've learned older, and my mom was an accountant, so she was working with numbers on a daily and taught me budget things and whatnot, but it was more of the sense of fiscal instead of financial literacy for the personal side of things, which is a big difference. Yeah. So let's dive into figuring out cost segregation. What is cost segregation?
Cost segregation is really an advanced strategy. So think about it like this. If you have a rental, your tax professional is probably telling you that you can depreciate that rental over 27.5 years. And, they crunch the numbers that way. Well, cost segregation literally is a strategy where you're breaking down everything in the property into little parts, and you depreciate that faster. You can take a larger depreciation now instead of 27.5 years, instead of it being amortized over that 27.5 years. And what that does is it puts a lot of dollars in your pocket. So if you have one rental, sometimes it doesn't make total sense, but it's worth the conversation. You do need to have a specialist who does cost segregation. Okay, they're very few and far between. You need someone that really understands how to do that can really has the white papers and the testing to prove that that's really how it was depreciated. But if you own multiple properties, I see people who have lots of real estate, apartment rentals, and they are not using cost segregation. I'm like, what are you doing? What are you thinking? Oh my goodness, we're overpaying Uncle Sam.
Yeah, that is crazy, especially being able to, write these larger tax write-offs earlier and then increase your cash flow. it's powerful strategy for anybody that's invested in property. And once again, I know I'm sounding like I forgot what movie that is. He's like, he keeps repeating himself. I think it's an Adam Sandler movie. And once again, this is why you need to book an appointment with Leah. What is it? Is it Groundhog Day?
Groundhog.
He keeps repeating himself. And so, because people don't know these things, and this is something that we even talked about, beforehand, Ms. Leah, is that, should we ask this question? Should we ask this question? Well, yeah, because a lot of the times people just don't know, and it goes in one ear, it goes out the other, and then we just don't know. And it's like, oh yeah, I do need to do that. Oh yeah, I remember Leah saying that. And then we go and ask our tax advisor, or we go and ask somebody else, and like, oh yeah, you don't need to worry about that, and because they don't want to do the extra work, or do something that they might not know about. And so this is where you really have to be able to ask these questions and know these questions yourself. Just because you rely on somebody else to, why not get additional information? And that's why we share with our clients, hey, bring us back in things that you might have heard, because we're either going to say, hey, yeah, or maybe no, we shouldn't look at that, but we want you to ask these questions, right? Because it's all about information. So one of the last questions we got for you, right, is, can a charitable given, right, be used by an average income earner, or is it only for the wealthy? Right? How does that work out? Because a lot of people think, oh, I got to give money and I get this, that, and that. Talk to us about that.
Yeah, I'm definitely going to address that, but I want to highlight something you alluded to, and that is this is how you tell if your tax professional is a historian or if they're a strategist. Ask yourself this question: when was the last time my tax professional came to me with an idea that could save me money or time? If they haven't done that, they're really historian. You can also be bringing ideas to your tax professional, but they should also be asking you questions. So how can the average person use a charitable giving? We all know about giving to charity, and that is a great strategy if that's in your heart. But what if you have something that's really, really deep in your DNA? It's really part of your vision, in your dream, is to start an organization. Maybe you want to pay homage to someone who's passed away in your family. Maybe there's something that was really important to you growing up. I have one client that she was a folklore dance, which is like the Mexican dancing with the beautiful dresses and everything. And we helped her to set this up. And she's a teacher. She's not somebody that's making millions of dollars. And you're able to do this very, very simply. You could set up a charitable organization. It costs you about $5,000, only about $5,000. And what we were able to do with that is carve out a portion of her life insurance that will go to this nonprofit. And what that does is, instead of giving maybe a one-time $10,000 to that organization when she passes away, she's going to be able to have her charitable organization donate $10,000 every year into perpetuity. That's called leaving a family dynasty. And listen, I said that with minimal dollars. If you don't have $5,000, guess what? You can make payments for that. You probably need life insurance anyway. Well, instead of getting $1 million, maybe you get 1.1 million and you leave $100,000 to that charitable organization. This is about creating those family dynasties, actually breaking those generational curses, and truly changing our last name forever.
I love that. The truly creating generational wealth. And I think, Ms. Leah, the biggest thing that a lot of people miss is that there's not just one path to generational wealth. It is a combination of multiple paths. And if you pile every conversation that you and I and David have had within the Dynasty Builder Conversation series, it literally is multitude of paths that help you get to that financial literacy, which ultimately brings that generational wealth that you can set up. Because again, like you say, you don't have to have everything, meaning you don't have to have a bunch of money right now. But what you do need to have is a strategic plan in order to make sure that we get there to the end goal of it, right? And so that is the beauty of having these conversations and why we sit down and to have these conversations. So, Miss Leah, as we wrap up this beautiful conversation today, let us know why, in a very short way, why taxes matter. Because guess what? We're coming up on tax season here, just in 15 days. Those taxes are due unless you guys are filing extensions. So how do people go ahead and take advantage of that?
Yeah, I think about it this way, Miss Christmas, which is there's the one who learns the rules, there's the ones who change the rules, and there's the ones that change their last name forever. I know I've talked about this all the time, but you know what? Some people are here and they feel like they don't care. Then when they die, they're just going to be dead. What does it matter anyway? Then that's not for them. But if you really want to do something different, if you are really thinking, gosh, you know what? I wish somebody had poured into me. I wish somebody had left me a legacy. I wish someone had left me some blueprints that I could follow. And by the way, also leave me a few dollars that I could buy a car, buy a home, invest in a business, go to college and do some things. Then you know what? If that wasn't done for you, then you should do it for them. Because here's the thing. It's that just because we weren't born wealthy, that's not our fault. But it's our responsibility to leave a financial foundation for the people that come after us, whether it's your children, your grandchildren, your nieces, your nephews, or your brothers or sisters.
Yeah, and at the end of the at the end of the day, people have to understand this isn't complicated. The complicated part is not for you to be worried about. It's for you to just understand the rules of the game. And Leah can be that person to help you understand the rules of the game because they already exist. And you really got to ask yourself, are you playing the game or are you just paying into it? And a lot of the times we're just paying into the game and we don't know the game and you're just giving your money away when you should get out of your own way of not worrying about telling somebody else how much money you make, where you've been blowing money and where you've been wasting money at. That's not what this conversation is about because believe me, we all have done that. My first year out of college, I made $100,000 and I can tell you right now, I have no clue where one penny of that went. It's gone, right? It is absolutely gone. And I beat myself for it every time. But I can't look back. I can only be present at this moment right now. And so this is why we share with you guys. Book that call with Leah. Have a conversation. Look, you don't want to book the call? Go to her amazing Biz in a Box. It's more than a website. It's an experience into building your dynasty. And go download the 5 financial golden nuggets. Go download, the actual solo 401k. Go download all these amazing the life insurance blueprint. Go download all these amazing free things that she has that you could be implementing or at least ask her about when you do book that 15-minute chat. So if you don't know all the information right now or don't know the rules of the game, this is where you go to leahgarcia.io and you go download these free things and be like, damn, I got a question on this. Dang, I got a question on this. Dang, I got a question on that. Maybe I might need more than 15 minutes. Then trust me, if you got the questions, I can probably assure you Leah's going to sit there and answer the questions with you, right? But don't take it too far, right? Don't press the maybe, baby. And so, this is where we really have to be able to just press the button and do something different. And so with that being said, Ms. Leah, if you could, whisper in somebody's ear, what would you share with them why they should do business with you and trust you with their financial, dynasty that you have to offer for them? Talk to us.
Yeah, I would say that if they are tired of overpaying taxes, if they've talked to everyone and they're all telling the same thing, right? What I do is I get you access to alternative ideas and concepts that are not well known. And I'm going to help you to clarify that conflicting results. If that financial advisor is telling you, it's all, you don't worry about it. You're just a paper loss. You got to stay the course. You talk to your CPA and you feel like you're overpaying Uncle Sam, but they told you, you know what, don't listen to that financial guy. We need to have clarification. Clarity is going to bring your results, which is going to help you to actually build that legacy and stop paying the game and start playing the money game.
I like it.
Boom.
Where can I put my plate?
Well, with that being said, ladies and gentlemen, we want to thank you guys all for joining the amazing Dynasty Builder that we have on Fridays with Leah Garcia in the Hello Plaza Metaverse. You guys definitely make sure you go and listen to the replay. Go to her YouTube, go to her LinkedIn, go to her Facebook, press the button, go more importantly into her leahgarcia.io. Get the freebies and book that coffee chat. And until next time, you guys know the drill. Love, kindness, integrity, but most importantly, commitment and consistency. And until next time, toodles! See you guys later. You know the drill.
Are you ready to take control of your financial future? Introducing Leah Garcia's Wall of Wealth, the ultimate one-page financial plan to protect, distribute, and transfer your wealth with confidence. Whether you're a business owner or just starting your financial journey, this step-by-step guide gives you the tools to create a solid foundation for long-term success. Don't wait to transform your money mind shift. Download your free copy today at leahgarcia.io and start building your wall of wealth now.